Welcome to the midweek market update where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. We'll of course talk about AMC because what an absolute wild mover it was today. And then I've got 3 trade ideas to share with you towards the end of the video, so stay tuned. Jumping right into our S&P analysis, obviously we only have 2 days worth of price action to talk about, and in those 2 days, I mean, not a whole lot has gone on, but there have been some key developments, at least psychologically, things worth pointing out, so we'll get into that in a moment. But as always, starting off with our S&P sectors, who was leading, who was losing, and where was the weight? Energy sector led the pack today up about 1.86, and the builders to the downside there, 0.85. So neither one of those really make up a significant portion of the S&P. So what does? As we know, XLK, the tech sector, the heaviest weighted sector, it was up about 0.7 today. The XLF for financial, second heaviest weighted sector, up 0.16. And the XLV for the healthcare sector was down about 0.2. I mean, overall, just a very split day. Just visually, you can see here on the market minder what was up versus what was down from yesterday's close versus today's open, and just almost split equally 50-50. Can't be equal with 11 sectors in our S&P, but you get the gist there. So no surprise really that the S&Ps are only up 0.16. So let's go ahead and check in on some of these sector charts and just make sure that the risk isn't mounting in one particular sector that we should be aware of into the end of the week. The XLK for the tech sector looks fairly good here. I think we're going to get a very, very clear signal whether or not it's a long across not only tech, the Qs, our main watch list up here, but also the S&P, considering it's such a heavy weight of the S&Ps. If we get the breakout over that 139.27 pressure cooker top here, the area of balance that we've essentially put in, you're just looking for a move up towards those highs around 143.75. Now, to the downside, you sort of have less risk on the table, right? If we were to flush the 50 SMA, the low end of the balance, the daily bull flag, whatever you want to call it, I would say that we would want to see support come in at the double bottom neckline, which is right around 136, right? So by double bottom neckline, I mean that area there. That's what you would want to see hold. So again, that area is right around 136, which of course, if we just look at this, with boxes, right, there's potentially your risk and there is potentially your reward. And obviously that, looks better to the upside there. So all things considered, I don't think there's a significant amount of risk in the XLK, especially holding up in this area of balance and at the 50 SMA. We'll go over to our financials now to see what's going on here. Again, I don't really see an overwhelming amount of risk here. You clearly have an ascending triangle which broke out to the upward direction. No surprise, being in an overall uptrend. We did set a new higher high, and in an overall uptrend, that means that we have room, essentially wiggle room here, to pull back now, form a higher low, and then continue the uptrend like that. So not a whole lot of risk here in the XLF either. We'll move over to the XLV, and this one starts to raise a little bit of a question mark, right? We are clearly breaking down below a critical area of support, but the caveat is we saw some pretty hot and heavy selling on Tuesday, and now we're coming into that 50 SMA, and it's the first time we've really tested it in quite some time. So I would expect a little bit of a first touch buy reaction, if not just some sideways action here. So to me, I certainly don't want to ignore the selling that we're seeing, the break of the support trend line, but being at the 50 SMA and touching it for the first time in quite some time, I would expect, again, sideways to maybe a slight buy reaction at this level, meaning we don't have a whole lot of risk here in the XLV either. If it does go lower, you're obviously just looking out for this horizontal level, which is going to be around 118.50 if we were to just eyeball it, 118.75, somewhere in that general area, right? Because that's where the breakout started from. So your downside risk is here. I do think it's likely to go sideways, though, as we're at that 50 SMA. Let's check in on our VIX for volatility. Not a whole lot going on here either. Obviously, we've dribbled lower off of that sort of most recent spike, and we're hanging out sort of right smack in the middle between the comfort zone, above 15 and below our 20-50 mark. So not a whole lot to say about volatility right now. It is low. And then we'll go over to something like our TNX for the 10-year rate, and we'll just check in. I don't really think a whole lot's going on here either, obviously being smack in the middle of the range. I would really just keep an eye out for anything over 17 or under 15. Now, that could come sooner than later as we start to get the Fed speaking later on in the month of June. Obviously, they're going to have to do their FOMC meeting. Depending on what they say, that could move our 10-year rates. But as it sits right now into the end of the week, I don't don't really see it having a whole lot of impact. Let's move back over to the SPY daily chart and just talk about some critical developments here, because although we didn't move much, I do think there are some, things to point out here, right? The first one being that all last week we essentially put in a 5-day area of balance. On Tuesday, obviously a huge gap up, but we sold off back into that area of balance, giving us what we know as a look above and fail. So the typical target here is the bottom end of the range, which just so happens to be 418. How else do we know 418? Well, if we draw in this range, right, that's what we want to see hold as support. So I would say a flush under these 2-day lows should bring us to 418. In which case, I would want to see that act as support, and then for us to retest essentially the top end of the 5-day balance at 420.73. What's really interesting about today's doji is we had really, really mixed signals, and we'll get into that when we get to the market profile and the internals. But as the chart sits, 418 critical support, probably the target, honestly, into the end of the week on the flush of the 2-day lows. After that, 416.50 is still, your very, very critical support. If that one goes, then it's another true look above and fail of this overall range, which we've drawn out here, in which case the target is obviously this area down below. But as the chart sits, again, I'm likely thinking that this white line up here is the more likely and probable scenario. To the upside, should we get a massive rally into the end of the week, your target is probably just up here at Tuesday's high. Let's go ahead and go over to our internal screen, talk about what happened this week. If you're not familiar with this screen, get familiar. Top right-hand corner will describe what this is, how you can use it to make your intraday trading better, and how to set it up. So definitely check that out. For now, volume reads have been pretty impressive on both today and on Tuesday, both over that 300 million mark. However, if we just flip back to SPY because it's a better visual, you'll clearly see that volume really wasn't that impressive, right? To the downside here in SPY, slowly tapering off on the holiday week. But what this means is that across the market, there was a fair amount of volume flowing in and out of the basket of stocks, right? The 500 stocks inside of the S&P with a skew to the upside. So to me, that has to be slightly more bullish than bearish. Moving over to our advanced decliners, again, very sort of disjointed here between what happened on Tuesday with the sell and what happened in our internals. I mean, screaming to the upside in the volume. Advanced decliners held up strong, and the tick build, I mean, my goodness, that's one of the stronger ones we've seen in quite a while, closing right around 4,000. So I don't entirely know what to make of that, but to me, the underpinnings of the market seem to be more bullish than bearish, as we've discussed with the XLK looking pretty bullish, the XLF. I mean, overall, I have to be more bullish than bearish, especially when we're talking about a broad market index that was literally designed to really go up. Sure, it can have little dips here and there, but the overwhelming, I mean, let's just prove a point here, right? If we go to something like the SPY monthly chart on a 3-year time frame, if this would load, of course it's not going to, so we'll just try out the 2-year weekly. I mean, look at this. It overwhelmingly goes up for the history of forever. We could load as much time as we want here, max available. What does the stock market do? It was literally designed to go up, so just keep that in the back of your mind before you make huge bearish bets at all times, right? But keeping it back to the issue at hand here, I want to move over to our market profile and discuss some of the nuances that we saw here, okay? So here we're seeing the market profile, right? We clearly had single prints on Tuesday morning when we saw that sell-off to fill the gap and then move lower inside of the balance area. Now, what I thought was very interesting today was the fact that we had single prints starting here. And what we know about single prints is that when we get into them, they act as very little resistance. So in B period, we get into them. We close B period inside of them. C period opens up inside of them. We get all this acceptance. Basically, look at all these TPOs that we spent up here. There was a decent amount of volume traded on the day up here, but we never, moved higher through those single prints. As a matter of fact, we rotated lower and pretty much test this poor low. And once again, you put in I would call this a weak low at this point, seeing that they're almost equal there. No real material excess on this TPO here. So I would say just an overall question mark. It's like the market should have gone higher through these single prints, but it didn't. The market should have gone lower when it broke this, very, very obvious mechanical low, tested here, and it just didn't. It didn't go to the overnight low. Overnight, was here. Look at where the point of control is, almost equal. So to me, it's just a very indecisive market as it sits right now. And, I guess the point I'm trying to get across is I wouldn't force anything until that XLK and the tech sector really takes the lead and tells us, yes, we're either going higher or no, we're not. So keep in mind the balance areas that we've talked about, the targets there on the SPY chart as discussed. Obviously, we're going to have to adjust this back to the daily. But again, just very, very indecisive market. The market seemed like it should have gone higher, right? As we accepted into those singles. That's this upper wick on this doji chart. We accepted there, got a couple of TPOs wide, should have done something like this. Didn't. Tried to go lower, flushed underneath that overnight point of control. Didn't go lower to the low end of the balance. So again, to me, just screaming like a massive question mark, in which case I think the XLK will be that sort of guiding light, if you will. If we get the breakout here, expect higher. If we continue sideways, I would expect the look above and fail to play out, at least to that 418.15 mark. Let's check in on the QQQ now, wrap up our broad market, and get into the juicy stuff, the AMC I'm sure you all came here for. So nothing but, again, continuation of our daily bull flag, very similar to the XLK. The breakout area still remains above that 334 mark. If we get acceptance above there, I would expect, again, 336.50. And then after that, maybe a move up towards those all-time highs, depending on the XLK and what overall this basket here is doing. Probably choppy if we do get up to it. But into the end of the week, definitely this should be on your radar. To the downside, 2-day lows, if those flush, again, looking at that 50 SMA, and then the neckline of the sort of double bottom, as discussed in the weekly watch list. Not a whole lot has changed there. Moving over to the IWM for the Russell 2000 and our small caps, this one is actually looking decent, right? I mean, for the rest of the market not to be trending, and then the IWM to actually have a clear uptrend starting to develop, at least off of these lows, right? As the market's balancing and SPY and the Qs, IWM is actually trending higher. So at the resistance trend line now, again, we're treating this with caution, right? We've been in a very long period of balance, starting from all the way back here, and we're going to be patient here. If we get the breakout, just looking to walk it up very gently, 230 rather, and then the all-time high. After that, it could see blue sky territories. If the rest of the market remains in balance, I wouldn't be surprised to see this one move more sideways as opposed to continuing being such a leader in the broad market. Let's go ahead and get into AMC now. I'll just give you a couple of thoughts here. First thought, obviously, it's a short squeeze. Obviously, it's a gamma squeeze. If you don't know what that means, it just means shorts have to buy to close their positions all the way up, which just fuels more buying. The gamma squeeze aspect of it, as people buy calls, market makers have to sell the calls, ultimately become net negative delta. And what do they do to offset that and return back to positive delta? That way, they've essentially canceled each other out. What do? They buy shares, okay? So that's ultimately why you get moves like this. At the end of the day, I do think it could potentially make a new higher high tomorrow, but I just want to remind you that these always end the same, okay? Don't think that for a second AMC is going to go to that $100,000 target that they talk about. If we just go to something like GME, the most recent example, what happens after a very aggressive gamma squeeze? Obviously, you get a very aggressive crash. Let's go to a couple other examples. SPCE for space, Virgin Galactic, very aggressive gamma squeeze. Eventually, someone's got to take the short end of the stick, right? We'll go to one more on TLRY. Again, this one's, pretty disgusting. I mean, look at this. Who is, holding from 67 and now the stock is trading 19? It's just not a good scenario to get involved with. They always end the same way. Don't think that you're going to, be the one who magically buys at the top and then it makes a, significant higher high the next day. If you did buy the top, I'm sorry. I would just try to bail if you can for a small win and then, count your blessings because you'll essentially get out lucky. Let's get into these trade ideas now. There are 3 headed into the end of the week. The first one is on Snapchat. The trade idea here is obviously we have a very obvious level of resistance, right, at 64.20-ish. If we can take it out, there's room to run. I would say the first target's probably half of the range in between here and the all-time high at 68.80, and then the all-time high would be on the table. Obviously, your support area that you want to hold is, of course, today's low, and we also like that because it's sort of forming a zone in this overall area right here. Prior areas of resistance, 1, 2, 3, 4, 5, held today as support. Let's just put a level to that. That's right around 61, okay? So that would be the area of support. Wouldn't really be interested in the trade if we fail back down below, but consolidation here, fine. Take it on the break over 64.20. Next up, we're going to go over to eBay, and this one actually already experienced the break. We've had this on our radar. It was a different trade idea, right? In the past, we talked about the gap fill reversal that happened here, but now, I mean, if you just draw an area like this, very clear break of that pressure cooker top on strong volume, right? Coming in much stronger than the prior day. And, we closed strong up here towards the highs. So I would just be watching this one for continuation into potentially this all-time high area up around 65. As long as it consolidates, as we say on the channel, in the upper third of this range, I would remain bullish on it. If it starts to fail back down into that middle third, become more skeptical. You obviously want to see it hold 62.15 at that point. Would not be interested underneath that area. Next up, and the last trade idea I'll leave you off with is on JNJ as we come into that daily 50 SMA. Very similar to the healthcare sector, right? It would make sense being that it is in the healthcare sector. So we're going to watch here and see if we get any sort of follow-through bounce off of that daily 50 SMA. Are the institutions watching it? Do they want to buy it up? Do they think it's a good deal here at 165? Ultimately over that Wednesday's high, you're just looking for a retest of 168 and then potentially to the top of this range if we can break into it up there around 171. So to me, watching, very, very closely at this 50 SMA. Don't want to see it violate, of course, today's low. If it does, looks like there's some room to run lower, probably to this most recent local low, right around, we'll just, eyeball it there to 161.50. So those are the trade ideas, 3 bullish trade ideas, some thoughts on AMC. Be careful if you're trading it. Again, at this point, I would call you a gambler if you're throwing some serious money at AMC. I mean, there's just no predicting where something like this goes, right? There's no saying where it's going to open, what's going to happen in the overnight, where is it going to halt, where is it going to open after the halt has concluded. So please just be careful if you do decide to trade it. Use only risk capital. And with that being said, I wish you all a green rest of the trading week. I will announce the winners of the giveaway for the 10K subs in the weekly watch list on Sunday.